Hello and welcome to a new edition of Policy Watch. A new guest debuts on PW this week. Hema Ramakrishnan is a senior editor with the Economic Times. Many thanks, Hema, for joining us on Policy Watch this week. But before we get chatting on our top story, let's get you the headlines. RBI uses monetary policy, cuts the repo rate by 25 basis points. Rupee shows a rally, gains several points during the week. Sensex crosses the 20,000 mark again. The Cabinet Committee on Investment holds first crucial meeting, asks Defence and Petroleum Ministries to get their act together. The Direct Taxes Code bill to get a revision bill will be reworked, says top advisor to the Finance Ministry. Those are the headlines, and without further delay, let's get you our top story this week. After giving his recommendations on the General Anti-Avoidance Rules, or GAR, economist Parthasarathy Shom has indicated that the government will come up with a modified Direct Taxes Code bill. Shom has said that the changes will come after incorporating the suggestions of the Standing Committee on Finance, which, among other things, had suggested raising annual income tax exemption limit to rupees 3 lakhs. Here's a report. Take a look.
The Finance Ministry is looking at the Direct Taxes Code bill and working on tax structures as suggested by the Parliamentary Committee on Finance. The parliamentary panel, headed by senior BJP leader Yashwant Sinha, in its report last year had suggested raising the annual income exemption tax limit to 3 lakh rupees as against 2 lakh rupees proposed in the original DTC bill. The existing tax exemption limit is 1.8 lakh rupees. The parliamentary panel has also suggested that subsequent tax slabs be adjusted accordingly to provide relief to people reeling under the impact of inflation. The DTC will eventually replace the over 5 decades old Income Tax Act. Shom also said the way forward in the reform of the fiscal regime was to streamline the tax administration and exercise expenditure control and management. Bureau Report, RSTV.
There you go. Hema, before we get to DTC and its complexities, I'd like your opinion on something else. There have been reports in the media that have been saying, and of course Shom has also indicated for a while now, that this year perhaps the budget might see a return to the pre-2008 indirect tax levels. Service tax as well as excise, reports suggest, could be hiked to about 14%. These are all source-based stories. Let's take them as that. But now, how do you see that? If that were to happen, would that be a sound move fiscally, in your opinion?
I think that's a very bad idea. Basically, if you have to transit to GST, which the government is looking at, and, if they sort of arrive at a consensus, we should move to lower excise and service tax rates rather than, step up our rates. Because compliance would be better if you lower rates. I mean, that's very logical. And, industry, given the state that it is, would be very unhappy with an increase either in the excise rate or the service tax rate. The point is you have to improve compliance. You have expanded the base of service tax. Now you have to ensure that everybody pays for these services, which is not happening now. I think I would be very surprised if the government would actually go to 14%. If it's just for a short-term gain, it's a very bad idea.
Right. Fair point. Fair enough. Yeah. There are also concerns about inflation in the short term if that were to happen.
That's right.
People say, economists say, experts say that this is going to add to inflation in the short term. However, going by the science, going by what Chidambaram has been saying, going by what his advisors have been saying, the key theme for the forthcoming budget, this budget is going to be fiscal consolidation. And this, if it were to happen, could add up to 10,000 crore in the government's kitty. So not too many options there for the finance minister to shore up revenue, is there?
True. He is going to have a tough time, trying to shore up revenues. But I guess if he beefs up his tax administration, removes a lot of exemptions. I think exemption is a huge area where you have a potential to get a lot more revenue. They will have to have the political will to do that.
This particular phase, better tax administration, keeps coming up in discussions. I've done a couple of programs last week as well. This keeps coming up. Why aren't we able to get that phrase in, better tax administration? What does that really mean then?
see, better tax administration, the first thing you need to do is, I think you have to put your IT infrastructure. You get a mine of information now. I mean, you're flooded. Banks are giving you information. Mutual funds are giving you information. Now you have to sift through this information. You will have to find out who is evading taxes. But that, there's something called an annual information return. Now, the efficacy of annual information return became a little questionable over the last 2-3 years. Not much focus was there. So we have the technology prowess. So if we are able to use it better, I think there's a great scope for improving tax collections.
Right. I have a question on GST as well. Let's just get that out of the way, then we go to DTC.
Right.
The finance minister, state finance minister, and Chidambaram met in Orissa, I think last week.
That's right.
And it was another second meeting, I think, in 2 weeks. Now, GST has been in limbo for quite a while now. I used to be a Cub finance reporter when it started a couple of years ago.
Right.
Then Pranabda got through with it.
Right.
And then, of course, Sushil Modi is the convener now, I guess.
Right.
Do you see any consensus on GST? It seems to be the case that political differences are holding up the GST.
You are absolutely right, Athar. Political differences are holding it up. But the finance minister, when he was in Hong Kong, he told global investors that he hopes to bring in the bill by, there is an amendment to the constitution that is required so that both the center and the states are able to tax both goods and services. He said he would be able to do it by December. There is a lot of give and take in this. States want more rates. It's all right. You get along with some design, and later on you can make improvements to the design. Now, from the center side and the state side, I think again they're not really ready with the IT infrastructure. And the time now between, say, now and December, I think everybody has to pull up their socks and get the IT infrastructure in place.
There are differences on CST as well there.
Differences on CST, no. I think there has been some broad agreement on CST where they're saying that, the center has promised to compensate them for revenue. When you bring down CST, there are revenue losses. So now the center has agreed to compensate them. I think that is getting ironed out. So now you'll have to get your IT infrastructure in place, finalize the design, and BJP also there has to be bipartisan cooperation.
Right.
Unless you have that, it's not going to work. But I would still see that 2014, if he's promising, I'm sure it should happen.
I'm sure he has a plan as well.
Yeah, he has
Let's talk DTC now, our main focus now. The DTC in its current form is slightly different from what it was envisioned by Chidambaram when he was finance minister back then, as the direct taxes code. After Pranabda got done with it, there were changes there, and of course many people didn't agree with that draft as well. There was a huge hullabaloo there as well. So we also have seen business papers and other publications come up with reports, source-based reports, saying that there is a likelihood of including the standing committees, parliamentary standing committees, recommendations on the DTC to come, and the finance ministry is keen to implement it by 2014. I think it is also expected that an announcement of the DTC time frame will be made in the budget speech. Now, for the benefit of our viewers, for the viewers of Policy Watch, explain to us potential points of diversion or revision that the FinMin could be looking at if they're looking to revise the current draft of the DTC.
Yeah, you're right. Actually, there was an original DTC and then a lot of modifications came about. Now, the bill is it's the property of Parliament. Standing committee has given its report. Now, technically, the government standing committee is only advisory in nature. The government can, adopt the recommendations.
The recommendation is not binding.
Absolutely not binding. So, I mean, my own this thing would be that the government should adopt the original DTC. I think the original DTC wanted to have not just a simple, clear tax laws. They also said the tax, the rates would be moderate. And Mr. Chidambaram has been talking about, moderation in rates. He has been talking about a non-adversarial tax administration. I think all these elements are there in the original DTC. So all that the government has to do is to amend the, when they bring in the official amendments, they should introduce the original DTC, where again they would do away with a lot of exemptions and things like exemption limits and so on. That can be, if say the standing committee says 3 lakh and above should be the exemption limit, up to 3 lakh people need not pay. I think these can be revisited. There are no issues at all on that. But the only thing is that do you continue to keep on giving exemptions?
And for how long?
And for how long? And are you going to riddle your tax structure with exemptions? I think the best bet for Mr. Chidambaram would be to go back to his thing and explain to Parliament. Because the point is that the standing committee has not just looked at the bill that was presented in Parliament. Apparently, they had also asked for the original DTC. Right. So they have compared it. They know what it is. So I think it would be very easy for the government to say, look, we want to bring a rational bill. We want to, ultimately, what do you want to do? You want to increase your tax GDP ratio.
Absolutely.
So if you want to increase your tax tax GDP ratio, your compliance has to be better. And compliance would be better if you have moderate tax rates, if you remove exemptions. And I think the original DTC had this element of, equity and efficiency. Right. So if you ensure equity and efficiency, there should be no issue at all.
I'm glad you mentioned the exemption limit. Yashwant Sinha, the Parliamentary Standing Committee on Finance, he's the chairman there, he's heading it. And now he said that raising the exemption limit from 2 lakh to 3 lakhs would benefit the Aam Aadmi taxpayer or people like you and me. He says it would lessen the burden on the Aam Aadmi. Would you agree with him?
Yes, I think that's not a bad idea at all to lessen the thing. But then there is also, along with the exemption that you get, the basic exemption that you get, you're also, a lot of exemptions you have on the saving schemes that you, if I say put money in the PPF, I can save up to 1 lakh and get a tax deduction. Now there needs to be a change in policy there, where right now you're not taxing any savings at any stage. You're not taxing it while I'm contributing, you're not taxing it while I'm accumulating the savings, and you're not taxing it on withdrawals. Right. Now, this is called an EE system, and the original direct taxes code had said that we move to an EET. Right. So when I withdraw from my PPF, or at the end of it, I pay because I'm going to consume. Now, suppose I were to put it in something else, I withdraw my PPF, and if I were to put that money, say, in NPS, then I shouldn't get taxed. Now, this is a very fair system that when I spend, so in a way, you also tax the rich. People who spend more, would be taxed at a higher rate. So I think that makes tremendous sense. So my own, if the government is able to do it, they should give a rational explanation to Parliament and say that, look, we are going by the original DTC. That would be the most sensible thing to do.
Fair enough, fair enough. We'll end this segment here. We'll come back on the other side of this break. We'll discuss our second story of the week. Don't go anywhere. More with Hema Ramakrishnan on the other side of this break. Keep watching Policy Watch. Welcome back to Policy Watch. The Cabinet Committee on Investment held its first meeting this week. The panel has given a month's time to Petroleum and the Defence Ministries to resolve differences over oil exploration in 39 blocks, including the all-important KG-D6 basin. The panel was formed last month to fast-track investments and clear oil exploration in 39 blocks stuck due to objections of the Defence Ministry. The committee is expected to serve as a single window clearance for approving infrastructure projects of over 1,000 crore rupees, bypassing most red tape. The panel will meet again next month. Hema, the first crucial meeting, it's the CCI is headed by the Prime Minister. They've told the Petroleum and the Defence Minister to sort out the differences, especially regarding these 39 blocks and the Krishna-Godavari basin. They've been giving specific time frames, 1 month to be exact, to get back to the CCI. The Defence Ministry had put, if you remember, very strict restrictions on 32 blocks, classified 14 of them as no-go areas. The Oil Ministry, of course, was very unhappy with the Defence Ministry. Reliance is the biggest industry, biggest company in the country. They have invested about $16 billion in oil exploration. What is the sense that you get on whether or not the CCI can actually bulldoze its way through cutting red tape? Do you think interministerial politicking and bickerings can hamper the CCI as well?
No, I think this time the government is really serious, because you can't hold policy to hostage. I mean, just one clearance or the other. And it's a little unfair to investors as well. Not a little unfair, it's blatantly unfair to investors that you auction blocks and then you tell them, no, you can't do anything here because, either some survey is going on, or we're going to launch a missile from here. I think it's absolutely absurd. And this is a lot of investment. You can't let assets lie idle. I think the government is very serious on this, and I suppose if they don't get to resolve the differences, the Prime Minister will have to act, and he will have to take a call on this. You simply cannot let assets idle away.
What are the chances that some people think the new CCI is sort of a toothless tiger, isn't really going to be very effective? It succeeded something that was called the Cabinet Committee on Infrastructure. Most economists or a lot of people in the industry, the doubting Thomases, India Inc. is leading the pack. They're saying that this is nothing but a toothless tiger. What is the sense that you get? Is the CCI going to be any different from the earlier CCI?
I would definitely think so. I would put my bets on the CCI, because I think the government is aware, and there is international investors would also be wary to come and invest in a place where you don't know whether you're going to get the next clearance or not. I think both Mr. Chidambaram and the Prime Minister would go all out to ensure that it gets starting, because you cannot revive growth unless you get your investments going. I would be very positive on it.
Okay, fair point. Also, one more point that we've been coming across when panelists and discussions happen on our channel is that the non-clearance of blocks. This is India Inc.'s worry, of course, and the investors' worry as well. That it would lead to an exodus of foreign investors who have, put a lot of money into the country, who basically were assured that this is a very conducive environment to invest in India right now, and also lead to the loss of faith and credibility for the government. Is that perhaps a valid, if slightly overblown concern?
Well, I won't say investor exodus. My own investor sentiment would be hurt, just like, when you did a GAR or you did a Vodafone, there was a sentiment which was hurt. But yes, like you rightly say, the government has to act, and if it doesn't, now a timeline has been given that the two of you better sort it out within 1 month. And if they don't do it, I expect the Prime Minister to take a decision and move ahead. So yes, investor sentiment would be dampened if the government doesn't do that. But my own sense is the government is very serious about it.
Absolutely. On that note, we'll take another small break. We'll come back with our third segment. Don't go anywhere. One more story to come right for you on the other side of this break. Welcome back to Policy Watch. The rupee strengthened to its highest level in nearly 3.5 months this week, helped by dollar inflows. The gains in the rupee came despite caution about whether the Reserve Bank of India, RBI, will continue to cut interest rates after lowering the repo rate by 25 basis points this week. The rupee closed at 53.30 to a dollar, slightly stronger than its close of 53.76 on Tuesday, after RBI announced its cut in policy rate, the first in 9 months. Its last strong closing was on October the 18th at 53.28 to a dollar. Traders said that the rupee benefited from a gain in the euro to 14-month highs against the dollar ahead of the Federal Reserve's first policy meeting of the year. The US Fed, is widely expected to stick to its super easy policy until the US unemployment numbers fall sharply. The BSE Sensex posted slight gains as Reliance Industries Limited recovered from a 4-session losing streak, while ICICI Bank Limited rose a day ahead of its quarterly earnings. The Sensex rose 0.07% or 14.10 points to end at 20,005, slightly above the psychologically important 20,000 mark after briefly hitting a 2-year high on Tuesday. Hema, rupee seems to be rallying this week. Fourth straight day it went up, gains midweek on the back of dollar inflows ostensibly. Also the RBI interest rate cut came in. What is the outlook on the rupee in the short to medium term? Do you see it strengthening further, or do you think it's just a flash in the pan?
Yeah, I think the outlook is positive. By the end of this month, Mr. Chidambaram is going to present his budget, and what he's been telling investors is that he would do a responsible budget. So if the budget focuses on fiscal consolidation, that would be a big gainer. And then the things that they have done for gold, he's curbed gold imports, so that would help. And if he's able to tackle the current account deficit, of course, there's a little concern over oil prices. Oil prices are this thing, but that can be bailed out with better FI inflows. So I think a responsible budget, a reform-oriented budget should keep the rupee, that the outlook would be positive in the
indulge me for one more minute. Yeah. The RBI just cut, after 9 months, they cut the repo rate, 25 basis points. It's a marginal cut, really. Industry is not really happy, but it's a start. Do you see the RBI, have their concerns on inflation, been addressed enough for them to go for another rate cut anytime soon?
I don't think so, because I think food inflation is still a worry. And if you look at the CPI, it's well over 10%. Now, I genuinely think that, now the action has to be from the government side. Government has to ensure that food inflation comes down. So that requires a whole set of reforms. You'll have to open up, procurement distribution to private trade. You can't just let FCI. You have to cut your subsidies. You have to do a whole lot of reforms on the government side.
The ball is firmly in the government's court.
I think the ball is completely in the government court. The RBI has done its job.
Absolutely. Yeah. On that note, Hema, will end this program. Many thanks, Hema Ramakrishnan, for joining us on Policy Watch this week. That, of course, was the senior editor with the Economic Times, Hema Ramakrishnan, who was my guest this week. Our first story this week, of course, was the Direct Taxes Code Bill. Now, the government wants to revise some clauses in the bill. Of course, my guest seems to think that the government should go back to the original DTC for it to be effective, for it to actually do what the original DTC had envisioned to do. The second story on Policy Watch this week, the Cabinet Committee on Investment met for the first time. Crucial first meeting, has asked the Defence and the Oil Ministries to get their acts together. Remember, 39 blocks they had put stringent restrictions on, 14 of them classified as no-go areas by the Defence Ministry. Now, the government has given both the ministries 1 month to get back to the Cabinet Committee on Investment and ease out so that exploration can continue. Lots of money there put in by Indian and foreign investors. We'll have to wait and watch for a month what really happens there. The third story on Policy Watch this week, of course, was the rupee rallying midweek. It does seem that in the short term, the rupee is starting to look good, of course. Dollar inflows coming in. RBI has cut rates as well. We'll have to wait and watch really how it acts, reacts to the dollar and the euro as well. We'll be keeping an eye on that. So you keep an eye on us. That's all the time we have on Policy Watch this week. Athar Khan saying goodbye, good night, and thank you for watching.